please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Is the central government heading towards a breach of its fiscal deficit? GST revenue is still below the government's target of 1 lakh crore rupees, and the centre could be staring at higher expenditure in what will be an election year. First up, to break down the math for us, let's go across to Sapna Das, who has the GST numbers. Sapna, this is starting to be a concern as far as the government goes. We've just seen on the 21st of July another set of rate rationalisation being announced, which is going to further impact the GST revenue. Take us through the GST math and how it stacks up.
Well, before we get into the numbers on the possible revenue foregone impact due to the GST rate cuts and deep rate cuts for that matter, a couple of issues that need to be kept in mind. There is no actual sense of panic in the government, but there is a bit of a concern because, your revenue buoyancy, which is actually there, has been lost to an extent because of these rate cuts. Those, that money has actually been foregone. So if you look at the very rough ballpark estimate of revenue foregone for the current year, it could be anywhere in the range of 7,000 to 8,000 crores on a monthly basis. If you annualize this number, it becomes bigger, 80 to 90 odd thousand crores. And plus, let's not forget the July 21 meeting itself. The annual impact is estimated at around 16 odd thousand crores to 20 odd thousand crores, and this monthly average of 7,000 to 8,000 crores of revenue foregone estimate will include that. Now, if you look at the devolution formula, 58% and 42% for the states. States have nothing to worry about because here the center will compensate them, but it's a state that will take a hit of around 58%. Means around 40 odd thousand crores of estimated revenue foregone for FY19. This is all based on the first quarter average monthly collections around 95 odd thousand crores. Now, every 18,000 crore loss translates into 0.1% of GDP. That has a direct impact on the fiscal deficit. So that could be one of the key concerns that may emerge if the second half of the financial year the consumption doesn't pick up or there are further GST rate cuts. So that has to be kept in mind. And of course, last but not the least, the government basically aiming at 1.03 lakh crores of net GST collections every month. If that's what they're able to achieve sometime during the rest of the financial year, probably they'll be able to make up for all these estimated revenue foregone numbers. So overall situation in control, not panic. There's no panic, but a bit of concern emerging due to these rate cuts which have happened.
Oh, absolutely. No one is suggesting that anybody is pressing the alarm bells just yet, but this is a cause for concern because the government continues to be short of that revenue number 1.03 lakh that it is estimating on GST. That's the net number that they're working with. To discuss this, we're now joined by an eminent panel of experts. We've got with us Sachinandan Shukla, Chief Economist at the Mahindra Group. We've also got Lekha Chakrabarti, Associate Professor at NIPFP, Abhishek Upadhyay, Senior Economist at ICICI Securities, and our very own Lata Venkatesh. Lata, let me start by asking you, we were just putting together the indirect tax picture, and of course there are a lot of variables here that could change during the course of the year. But what would you be watching out for?
Well, we're just going with the new announcements that have come after the budget was announced. So while Sapna has explained the revenue part, look at the expenditure part. The Ayushman scheme was announced in some detail only after the budget. Now, there are various estimates on what it might cost. The centre's cost, the total cost is estimated at 12,000 crore by the government. So 50-50, there would be about a 7,000 crore hit to the government. But there are private estimates which say that that scheme will actually cost 24,000 crore and the centre's hit could be 12,000 crore. So that would be something like 0.05% of the deficit. Then you come to MSP. Again, under food subsidy, the government has taken a slightly higher budget estimate. But then if you looked at the MSP scheme, again, estimates vary. There are people who believe that it could be as high as 40,000 crore. Again, if you put 20,000 crore for the government, it comes to another 0.1% in terms of fiscal deficit. And finally, Sapna's math on GST, say even if the centre's shortfall is 5,000 crore per month, then the shortfall will be 60,000 crore for the full year. Then you're staring at a fairly large, 0.3% more of fiscal deficit. Together, it becomes 0.5% of the fiscal deficit. If you looked at GST shortfall plus Ayushman cost, that is unallocated Ayushman cost and unprovided MSP cost, then a full 0.5% of the GDP becomes the fiscal deficit. Is it going to be as large as that? That's the question we need to ask. And of course, let me take it to our experts first. First, to you, Abhishek. Abhishek, the numbers that came earlier this week on fiscal deficit actually indicated that the fiscal deficit for the year in the first 2 months is about 69% of the time. It was 81% of the total deficit. So actually, it looks like this year we are doing better.
Well, Lata, the details are not so encouraging. So the only reason or the main reason why the fiscal deficit number is not tracking so bad when compared to last year is because in April, the government collected a lot of GST revenues, close to 1 lakh crores. This was not available last year. Remember, in the pre-GST regime, the revenues for March used to be paid out in March, right? In the GST regime, the revenues that accrue in March are paid out in April. So if you adjust for this fact, then you are more or less tracking very close to the fiscal deficit that printed last year as percentage of budget estimates, which is not a great picture.
Okay, so you're saying that not entirely encouraging if one looks at the internals. But Lekha, what would you be most concerned about? One, of course, is the shortfall that we're seeing currently as far as the GST is concerned. And perhaps that picture could look worse if you factor in the rate cuts that have already been announced. And maybe if the government were to pursue the rate rationalization even further. We've seen the government say that 28% is going to be restricted even further to only include sin goods and luxury items. What would you be most concerned about today?
Yeah, well, when you look at the fiscal forecast errors, it's too quick. We economists are very impatient to look at this fiscal forecast errors. And I think it's quite bad. Because, this high frequency data, this looking quarter to quarter, monthly, it's too impatient to tell about the fiscal forecast errors. And, if you look at the annual cycle, Ministry of Finance, Government of India is doing their job. If you look at the bias in the estimates and if you look at the random factors which add to their errors, it's a random factor that's more than the bias of the Ministry of Finance. So this has to be kept in the mind. And when we look at the revenue estimates, this shortfall, it may be just an aberration, but the cyclicality of the returns, we are working on it. The cyclicality of the returns is very important, and it's too it's too quick to analyze that we are having the shortfall of revenue. So we have to be patient, and two structural factors we need to do here. One is the rationalization of the rates. And I'm not arguing for one rate for GST, but rationalization of taxes, this multiplicity may be creating the issues. The second is the ease of doing business, the ease of getting the returns filed. And government is working towards that. These are the structural things we can do to ensure more returns. But Ministry of Finance, Finance Minister has rightly pointed out that the volume of business is now known. It's not an unobserved variable anymore. We know that based on the invoice system, we know that how much people more are into the tax net. That's a good news, and there is a tax buoyancy relationship between the indirect and direct in that sense. So the picture is good on the tax side. But when it comes to the expenditure side, MSP, that's a concern, and Ayushman, that's a concern. But as Lata rightly pointed out, it's we just announced it's not accounted for, it's not backed up by any allocation. And this Ayushman Bharat is based on a cooperative federalism framework. So the flexibility of the states, how they are going to play, that we have to wait and see. So the, who is going to bear the burden, whether it's a center of the states, that we need to see, whether it's more than proportionate burden is going to be on states.
No, it will
in the case of Ayushman. And
just a quick point before Yeah, just a quick point on that before I toss this across to Lata. On the Ayushman Bharat, of course, it is going to be split between the centre as well as the state. But it's also important to note that we're only talking about implementation from October. So it's not going to be a full year rollout of the Ayushman Bharat scheme. And hence the allocation that people were estimating could run into 20,000 or 24,000 crore rupees. My sources within the government are very clear that it's not going to be that high, at least as far as the initial rollout is concerned, because it's only going to be a rollout for a couple of months if it does roll out in October, which is the plan at least at this point in time. Lata, back to you.
Okay, I wanted to get Sachin's views as well. Sorry, Sachin. What's your sense? Do you think this GST shortfall is going to be very serious?
I think at the risk of sounding a bit impatient, as the professor said, we can continue to monitor the monthly run rate. It's short right now as we speak. The problem is bulk of the revenues will come only in the last quarter. So 30 to 40% of the revenues are likely to come by only in the last quarter.
You mean consumption picks up in the last quarter?
Exactly. I mean, the way the economy works and the cyclicality part. My worry is not only confined to just GST, since we're talking about fiscal deficit. I mean, if you allow me to step back a little, what has happened is last 5 years, if I take that as a block, this government has been extremely lucky. The tax revenues have gone up 2% of GDP. I don't really think any government has been that lucky. We know the reasons thereof. But things have started to change from this fiscal year. First thing happened is that after 6 years, we had to actually up the fiscal deficit number, right? Because of anticipation of some of these risks. Second, if I look at some of these numbers, right, as the 5-year block, if I continue to talk about it, my GDP in nominal terms is up 50%.
Okay.
Revenues, government revenues have grown 57%, and expenditure is just 47%, right, as a block. And we know the subsidy part and the oil part. But things have changed, and we spoke about Ayushman and MSP, which remains to be seen. I think we've also seen a sugar package being announced. We are still underestimating.
Unprovided for, yes.
Yeah. So, I mean, if I look at the unprovided for, it's a sizable chunk. But if I look at the revenue part, the tax, assuming
Is it
nothing,
encouraging for you?
It's kind of. But if I go to the non-tax revenue part, again, I can't think of any other, say, block. OMCs may give you some dividend. But there I can see a shortfall of 0.1 to 0.2%. Divestments, we have got just about under 10,000 crore. The number is 80,000. Again, it will be back-ended. But, I mean, if I put all of this together, I'm assuming the GST comes as the government and everybody is assumed, as the professor says. Just the non-tax revenue part and some of the things that we've spoken about, Ayushman and say the sugar package, etc., and the GST rate cut, we are looking at a shortfall of 0.5 to 0.6%, even outside the GST. So we are looking at a risk on the fiscal side, and which is being reflected on the GSEC side or market yields.
Exactly. Now, actually, but let me take Abhishek's view on this as well. Abhishek, how are you looking at the direct tax? You know, Professor Chakrabarti spoke about this buoyancy in indirect taxes, which is also related to direct tax. I mean, there are more people who are in the tax net, and therefore they will have to declare even their direct tax incomes. How are you expecting the direct tax to perform this year? Will it do as well as it did last year? Last year it came up to speed. This year, there are some who believe that the best of growth is over. So if there is no growth, then again, I mean, if growth is slower, then direct tax could be a problem. Are you assuming that that will be as per budget expectation?
No, so direct tax growth this year is assumed to be lower than last year. It's closer to 14%, which is not very far from the nominal GDP growth that we expect for this year. And our view is that growth overall this year would be much better compared to last year. So I don't think cyclically there is a lot of pressure on direct taxes. The worry there is that a small component of this is the capital gains tax, which is close to 20,000 crore. Now, if you look at the index level, markets are up, but the broader markets are not up so much compared to Jan 31, which is the cutoff date for measuring the capital gains tax. So there could be some shortfall there, but broadly about the question on compliance gains, Well, we are not seeing any compliance gains on the GST side so far. So it's hard for me to extrapolate that direct tax revenues have started to increase because of that. The GST revenues have gone up to 96,000 crores recently from, say, close to 90,000 crores in the earlier months. But that could only be a function of nominal GDP growth that we have seen in this period. So hard for me to say that compliance gains have really kicked in. We know that anti-evasion measures have much of those anti-evasion measures are yet to be implemented. So I would reserve my judgment on the compliance gains really boosting direct tax revenues. That will happen in the medium term, but I don't think that is the story for this fiscal. So I'm not really very worried on the direct tax front. My worries continue to be on the indirect tax front and mainly GST, which you discussed earlier. Okay.
Dr. Chakravarti, what would your assessment be? Direct taxes are expected to grow by 14% and service taxes and GST are expected to contribute, I think the indirect taxes together are placed at about 19%. Where do you think the shortfall might come?
It's too tough to, talk about the shortfall, whether in the direct or in the indirect taxes. But of course, this rate rationalization is going to be an important factor which is going to play. And second is the GDP growth. And you can understand that our GVA, especially of the non-agriculture sector, is doing very well. So that economic activity is buoyant, so that taxes should be buoyant. But when you look at the states, I had a quick check at the state finance of RBI 2018-19 picture. And in the case of states, in the case of West Bengal, in case of Chhattisgarh, Assam, Bihar, and a little bit in Mizoram, the things are not good. Their tax buoyancy is negative. So at the state level, except for 5, the tax buoyancy is positive, but these 5 states we have concern. But whether it's direct or indirect, we have to wait and see. But I'm so happy to have the focus on non-tax revenue as well, and especially related to the mining sector. There is an onerous royalty regime we have in India, and the rates are up, and it's the highest in the world, our royalty rates. So this is going to affect the competitiveness of the sector. So the royalty group is there, and the focus on the non-tax revenue has to be there, especially on the royalty, because this regime is very onerous. So I'm so happy to see that focus on the non-tax revenue.
Okay. Yeah. Okay. I'm just trying to find out if we are only having shortfalls on indirect tax or whether we will have shortfalls on direct tax as well. But let me come back to the expenditure front. MSP, Sachin, what are your calculations? And I mean, at the moment, even the governor of the Reserve Bank said that they are raising the expectation of inflation by only 10 basis points because they don't know how it's going to work. But what would your estimate be? Is this going to be an onerous expense which is not yet provided?
What I think is the government will be constrained by the deficit number. We have seen the deficit, the subsidy number on the food side go up by about 29,000 crore roughly. And I think that should be sufficient to cover this. The other way to do this is whether it is below the line. I mean, whether it is going to be through FCI.
Okay.
So even that accounting
last time they transferred from the small savings to FCI, whether they would do it again?
Could that happen? I mean, just a guess. But taking everything together, I think monsoon has been fairly good in terms of quantity. We've seen the spread improve over UP and some of the deficit parts. And therefore, it all boils down to how much are you going to procure, right? And therefore, 29,000 crore to me, I mean, whatever they have budgeted, looks like sufficient, and they will have the fiscal deficit.
That is the normal rise in MSP. That did not take into account the abnormal rise in MSP, which supposedly the new plan was...
Actually, no. So again, if I go back to that 5-year block number, food subsidy has actually remained stagnant, roughly. It is only this year, the 5th year, where they anticipated some of that, and they raised it by about 29,000 crore. So I think that and the accounting part, which we don't really know, and we also don't know how they're going to procure.
Much the states are
I think by and large that number should be okay. So my worry is not so much on expenditure actually going out of control. As I said, they've done a remarkable job in containing expenditure growth.
Remarkable job. Oil helped us.
Fine, but again, as I said, I mean, with the GDP going up, revenues going up, the propensity to splurge, I mean, any government in the world, I think in that sense it's been remarkable. And even the allocations this year, I think they've anticipated some of the MSP part. And to me, I don't really see that as going out of hand. I would be worried if the monsoon spread was really bad, and then you would have to spend more and procure more, and therefore the number could seem like a risk.
Okay. A final question to you on the tax revenue front, Abhishek. We don't have those excise largesse which the government had last year. Perhaps some of it could be trimmed closer to elections. If it is, in any case, how are you estimating that part? GST is one part, but what about the remaining indirect taxes?
Well, you're right, Lata. So excise tax on petroleum has been the big boost to the government revenues over the last few years, as Sachin mentioned. That windfall is now over. In fact, to the extent that government is not raising those taxes every year, in percentage of GDP terms, it comes down and it's subtracting from the government revenues in percentage of GDP terms. That is So that will be a headwind if I believe so far government has shown admirable restraint in not really cutting taxes.
Yes.
So the assumption is that if crude prices are sub 80 levels, so to say, they're not going to cut these taxes. So I am assuming some trouble there, but not a big shortfall.
Not a great deal.
I think that big
okay.
shortfall.
Okay, let me come to the place where since we are running out of time, let me come to the place where there could be trouble. If we indeed overshoot because of Ayushman and MSP and undershoot on revenue on GST or direct taxes, we should have some estimate by December. This time, the problem is that we have a bulk of the government borrowing happening in the second half. Also, the government has burnt its fingers last time around by announcing a government program on 28 December and throwing the entire yield curve out of whack. So this time, what might they do? Are you anticipating a larger government borrowing at all? Or do you think they will simply not touch that part since they have burned their finger and end up cutting capex? Abhishek.
No, so our assumption here is that the fiscal deficit will be higher by 0.2 to 0.3% of GDP, not as high as some of the panelists expect. That would imply that they may not need to borrow extra. I think after experience last year, when the announcement of extra borrowing really spooked markets, they would be extra cautious this year. They would have leeway available, I believe, from areas such as small savings collections. Already, if you try to gauge their inclination earlier in the year, after announcing the overall borrowing program, they cut that borrowing estimate by saying that we'll dip extra into the small savings collections.
Yes.
And also by cutting the buyback
and
estimate.
Also IGST.
So I believe
IGST, unallocated
right.
IGST.
Right, so the unallocated IGST part is the reason we expect shortfall in the GST revenues. If you look at the current monthly run rate for center only, that is the CGST and the unallocated IGST part, it's not very far from budget estimate.
Okay.
Our worry mainly comes from the fact that the unallocated IGST part is a big pool now, and states will have their eyes on it. So as they demand their share, center will be forced to share that pool to states, which will lead to some shortfall in the GST collection that we're talking about.
Okay.
But on the issue of extra borrowing, we think the bar is high. If you look at the recent trend in small savings collections, actually they've been quite robust so far. Which indicates that the interest on these deposits is higher than they ought to be.
Okay.
But I think that will remain the case for the year. So I would still abstain from saying that there will be extra borrowing this year, even if fiscal deficit is higher by 0.2 to 0.3% of GDP.
Okay, what do you expect? Will they cut capex? Quick thoughts.
Very much. I think given the shortfalls that we expect on the non-tax revenue, the divestment part, I think the propensity of the government, and we've seen that last year as well, capex will be cut in the second half of the last quarter. So definitely that's going to be the case. And I think the shortfall or the deficit increase could be about 20 bips higher, putting everything that we spoke about together.
Right. Okay, we'll have to wind up this conversation. The positives that we are getting in favor of the budget, in favor of the government, is that at the moment, up until $80, they've been able to withstand populist pressure. And therefore, if crude plays as it has played in the first half, we may not have a problem. Secondly, GST in the consumption is always heavier in the second half. And so maybe the collections will improve and the shortfall that we are now talking about may not happen. That could be the positive. The negative indeed is that there could be more giveaways as you move closer to the election, and that may also affect compliance. And the shortfall, therefore, could be that you don't go around borrowing more, but you end up cutting capex, which might in turn affect growth and the tax kitty itself. It's still very young in the fiscal year to worry too much about it. But yes, there are straws in the wind, and we better watch out these trends. Lekha Chakrabarti, Abhishek Upadhyay, and Sachindranath, thank you very much for joining us.